Hey everyone, Jason Balin at Hard Money Bankers. Hope everyone is doing great. Very interesting times here in the private lending and hard money lending space. Today is April 2nd, and I want to timestamp the date, obviously, because things are changing very rapidly depending on what part of the country you're in, what market you're in. Things have been changing kind of day by day, week by week. So I want to start off to talk about what's occurred over the last, let's say, 10 days or so. It's very interesting stuff. So pretty much any hard money lender that was backed by institutional capital, some sort of institutional capital, bank money, things like that, are pretty much out of business or no longer originating anymore. So Pier Street, some of the other larger Wall Street companies that were backed by Goldman and stuff like that, they're no longer in business. So if you're a broker, brokering deals to somebody who used them, or if you're a lender who had leverage and you were selling your notes to them, the whole secondary market of note buying for hard money loans, for fix and flips, long-term rentals, things like that, for the most part, is shut down. Now, a few of the companies are still doing stuff on a larger scale currently, because based on what types of liquidity they have and what type of capital they have access to, they're still able to do some sort of originating, but obviously they've cut back a lot. And there's just a ton of opportunity out there for private capital in the marketplace. Now, this video is obviously about, real estate investing and hard money lending and private lending. I don't want to go into detail related to the coronavirus and the doom and gloom stuff. Obviously, it's a very unfortunate time for a ton of people. So that's not really what I want to cover on this. I just want to talk about, the future of hard money lending and what my partner Chris and I at Hard Money Bankers are seeing related to private lending. So that's where this is about. Very unfortunate times. A lot of businesses are really, really struggling right now, and I get all that. And hopefully, you and your family are staying safe and healthy, and you're able to weather the storm. With everything that's getting impact. But, things are changing day to day. We have our main office in Columbia, Maryland. The DC, Maryland, Virginia area obviously was hit hard, but we're at stay-at-home orders. But if you're an essential business, you can still operate. Real estate as a whole is still operating. We're a non-bank lender as a private lender, so technically we can still work out of our office, even though we're really just working out of our houses. We'll get through all that in a second. But I want to focus on kind of what to do next, what we're seeing in the market, the types of deals that are out there, private capital, things like that. So we get that pretty much most of these institutional backed lenders are kind of out there. Lines of credit were yanked. The note buyers are gone. So really, whoever's lending right now are smaller hard money lenders, private capital lenders, companies that have some sort of creative capital stack that didn't rely as much on some of these institutional lenders. And again, they might not be gone forever. I think a lot of them, I see memos that come out from Lima One and Lending Home and Lending One and a lot of these national lenders. And, it seems like in their mind, they're paused right now. And that might be the case. Hopefully for their sake, that is the case. But, I don't know how easy it's going to be to just unpause, when all this stuff kind of goes away, and who knows how long it's going to go away to begin with. And, it happens so quick. But related to the real estate market, so we've been doing a lot of content regularly to our real estate investors, our local real estate investors. We have an office, obviously, our main office is in the Maryland area, Maryland, Virginia, and DC, and then we have a Philadelphia office where we do loans in Pennsylvania, New Jersey, and Delaware. And it's very, very interesting. It seems right now residential real estate kind of saw a little uptick. Houses are still selling. Investors are still buying. We've seen a lot of good opportunities. People still want hard money loans. And these are in areas that stuff's completely even shut down. In our Philadelphia office, real estate's is not essential at all. Construction is not essential. Construction is shut down. If we do a loan in Philadelphia today, they cannot get a permit. They cannot start construction, and they cannot even go look at the house at this point. So that's for the most part shut down. Real estate agents can't even go onto their local MLS to list the property. So that's completely on hold. That being said, it still hasn't closed down thing. Oh, by the way, you can technically settle on a property because title companies are still open. So you still can close, and we're doing loans every day. Not every day, but like a few loans a week up there, and we're still operating, but it's interesting times. So obviously now more than ever is the time you need some sort of creative capital stack or private capital, either your own money or private investors' money, because that's who's left right now, who are doing deals. I mean, I've read a ton of articles in Private Lender Magazine and Hard Money magazines and stuff that we've been doing and talking to a lot of other local private lenders. And most of them either went out or business or stopped originating. And even a lot of the private hard money lenders that I know, they've kind of on pause because they're unsure and they want to work out their current portfolio. And I'm going to give you our opinion in a second about what we feel related to that. But yeah, it's just interesting times. And we're going to start doing it seems like a bunch of, because we run our mastermind group, the hardmoneymastermind.com, and we're probably going to do a good bit of topics moving forward starting next week related, going back to the 101 with private capital and raising private capital again. Because let's be honest, if you don't have private capital already in your business, it'll be harder than normal to get it into your business right now because investor confidence, consumer confidence is down. Don't get me wrong. I believe right now is the best time to lend out private capital. I mean, what are you going to do? You can't really put it in the market right now. I mean, that's one of the reasons why a lot of these institutional lenders are out, because so many losses in the market currently. But that's just up and down, up and down, up and down every day. So what makes better sense then? Either keep it as cash or do some sort of low leverage investment, residential real estate. Now, again, most of the stuff we focus on is investment residential, not necessarily commercial. Commercial markets, who knows where that's going to go with a lot of businesses closing, office, retail. That's going to be very tough right now. But I want to focus most of this on investment residential, just because that's the world that we live in. Most of the deals we do are fix and flip loans, or loans where investors fix up properties and then rent them out and then pay us off with some sort of refinance. But I'll tell you that a lot of the people that I've talked to, although they're going through tough times right now, no matter where they are, if they're a real estate investor that has a fix and flip underway, or if they have rental properties and their tenants can't pay rent, in the real estate business, I still think that everybody's very optimistic still. I don't know if they're optimistic because they believe this is going to end soon, and then it's just going to be business as usual, because I don't believe that's going to be the case. I just think they're optimistic because, a lot of the investors that I talk to have been, they've had a good run, but they're also capitalized personally, and they, understand the business. They understand the real estate business in general. And by doing that, they believe that there's going to be a lot more opportunities for them as things happen. And, we'll see where that happens. Obviously the strong are going to survive, the weaker are going to end up going out of business. And the ones in the middle, they're just going to have to work their butts off and do whatever they can to make it work. So we did a really big webcast about a week ago to all of our clients. We had about 10,000 people on, of Hard Money Bankers clients, and that we did loans for and things like that, plus a lot of other community members. We had 16 speakers, 16 experts, and some of them were struggling, obviously. I mean, we have a few guys we know that buy a lot of Airbnbs. That's obviously shut off. Short-term rental stuff in general is shut off. We have some builders, new construction, and their stuff slowed down a little bit. But in general, it seems that a lot of them are optimistic. Real estate agents said they've had some of the best showings. So, but related to hard money lending in general, I'll tell you that we've had some really, really, really good deal flow that comes in. And we've cut back a lot on our underwriting, our guidelines to make it work. So before we were lending at 65% based off the after repair value, and we'd even lend up to 100% of the acquisition and the construction. On average, most of our clients were bringing in like 20% and we put up the rest, just on average, based on where the market was. Even though we could go up to 100%, most of them just weren't finding properties to fit those numbers. And because we always used only private capital, now keep in mind, 13 years, we've only used private capital. We've never taken on any bank money or anything like that. And a time like now, I believe that, we can stay in business and continue to write loans, good loans, because a lot of these other lenders, they had one capital source or two or three capital sources, and they're mostly institutional backed or bank backed, and they're just not willing to be involved in this space short term, and who knows, maybe longer term. But now our new setup for those of you lending is we're about 50% of the as is value and 50% of the after repair value, and our clients are bringing about 40% cash in. That's typically where we want them to be at. So if we lend 100, they're bringing about 40 grand cash to close. So that seems to be kind of what a lot of these lenders are doing right now, just to be safe, because who knows what's going to happen. Today, we might write a loan for $100,000 and we're comfortable with it, but it might be worth 90 tomorrow or 80 tomorrow. So who knows? So we want to be as safe as possible. We want the borrowers to bring as much money, as much skin to the table as possible to make sure we're as collateralized. Hard money lenders, private lenders don't want the property typically. They want to write a good loan to a good borrower that's going to get repaid. So we've been writing really good loans over the last 2 weeks. And we're working with borrowers now and clients now that I haven't seen or I haven't talked to in years, because we used to do tons and tons of business for them. And then over the years, we've been 13-3 forever. Well, we were 15-5 13 years ago, then went to 14-4 about 9 years ago. And then about 5 years ago, we went to 13-3 and haven't done anything different than that. But, we were priced out of the market and our LTVs were too low, and they were getting cheaper, more flexible, higher leveraged loans. So they'd go elsewhere. So I got guys I did 100 loans for years ago, and they reached out and they're like, what can you do? And I told them, and they're like, that's not going to work for me. I'm used to getting 90% of purchase and 100% of construction, and a 75% ARV, because that's typically what a lot of these national lenders were doing. And I was like, well, we're not in that space. Like, I'm not doing that deal. It doesn't matter how strong you are. So, we're sticking to our guns and we're writing good loans. And like right now, if we wanted to, like, we have so much deal flow that we could probably do 50 deals a month, but like, I'm not doing that. We're sticking to 10 deals a month. That's our game plan. We do about 2 deals a week right now, which is less than we did before, but I'm still uncertain about where the market's going to go, and I want to be safe. So we want to so literally what we're doing is we're cherry picking the best of the best of the best of the best. Our deal volume is the same as it always is, if not more. And yours is probably too. You probably have a lot of good leads that come through. And let me tell you, it's hard to say no to a deal that you would have said yes to 3 weeks ago. Because every single person that I quoted last month that told me we were too expensive and they wanted less cash flows, they all came back to me. And I was like, well, you didn't commit to the deal. If you had committed to the deal, we would have closed it, but you didn't. I got to restructure the deal, and now it's lower. So there's just a lot of good deals because there's a lot of activity, and there's not many funding sources right now. So I would recommend to you to start working on ways to raise private capital. That's important. The right private capital. Good capital investors understand the need for this business, and they're not going to be as scared to be in this space, and they want to actively be in this space. But again, you got to create a real relationship with them. People invest with people that they trust, but you also have really, really good deals. You need to have a very, very, very strong deal to bring to them, or it just doesn't make sense. So out of 90, however many, we have a good bit of investors, and we've always diversified to make sure we use a lot of them and not just 1 or 2 or 3. So if stuff falls apart, we have the ability to utilize. It doesn't take us out of business. We've had a few that were a little shy, and they were shy for about 2 weeks, and then they reached back out and they're like, you know what? This is a good time for me to invest in deals. And the reason why is a loan we wrote today is better than the loan we wrote 3 weeks ago. If they were in the game with us 3 weeks ago, they should be in the game with us today, right? Why not? We're writing loans at $100,000 today that we might have written at $140,000, a month ago or 2 months ago or 3 months ago. So, we've been using this. I've been explaining this strategy on all these live webcasts I've been doing, and it relates to private lending or buying rental properties or buying any asset. Today, you might buy an asset for 100. Let's say you buy 5 assets, the exact same assets. You buy one today for 100, the next one tomorrow for 90, and one next for 80. A month ago, you bought one for 130. Then a week ago, you bought one for 110, whatever it is, right? You do a cost average on it, and it works. The loans we're doing today are better than the loans we did 3 weeks ago, so why shouldn't we do them? And I know that a lot of people are scared to be in the space right now. And yeah, they want to stay in cash. I understand that, and that makes sense as well. But I'll tell you that we've had some of our bigger capital investors that want to deploy more cash, more money more money with us. And I'm not saying I have the deal flow for them because I can't necessarily do this. They're like, I want those deals. Those are good opportunities. I got nowhere else to put my money right now, into right opportunities. But again, they got to be the right opportunities. A borrower bringing 20% cash to close is not enough. That was enough maybe months ago or years ago. It's not enough. Believe me, 50% as is value, 50% after repair value, 40% skin in the game plus. That's our metrics right now. And that might even change. That might get lower, that might get higher. The beauty of this business is every loan that you do, it's a different asset. It's a different loan. You can treat it differently. Make an offer to a borrower that they can't refuse. And the reason why we're not doing tons and tons and tons and tons of volume right now, even though we have tons of really good deals, I believe, is I don't know where the market's going to go. So I don't want to push all my chips in. We never push all our chips in. This business is slow and steady wins the race. I don't want to go all in and do tons and tons and tons and tons of deals if this market's going to, go backwards. And I don't think it's going to. I think that for the most part, in the median housing price neighborhoods, I think a lot of this is going to stay somewhat stable. Maybe go down 10, 20% worst case, maybe more. I don't know. But we're betting that in the median housing price neighborhoods and communities, a lot of this stuff is going to stay somewhat stable. Upper class, maybe not. Lower, upper end properties, lower end properties, maybe not. But the median housing price neighborhoods, which is where the majority of the fix and flippers are anyways, in those subdivisions, in those areas, that's where that's where all of our loans to begin with are. That's where we've always been. Our average loan amount's $200,000, and we're in the DC area. It's still only like $200,000. So, yep. Hopefully that was some good information. Again, we're trying. Chris and I are trying to bring up-to-date information to all of the hard money lenders and private lenders locally. We have some other mastermind groups and some other events that we're going to kind of be involved in because we want to really, we're kind of on the front lines with this. We've been networking with a lot of other local private lenders and national private lender, or not national, but lenders that lend in other markets. So we've really been in touch with a lot of people to see what they're doing. And also I know a lot of real estate investors. We've done 3,000 local loans. So I know almost all of the local real estate investors. So I'm been up to date with what they're doing and things like that. And, obviously it's kind of our job to bring everybody that knowledge together so you can see what's kind of going on in that space. And again, our next mastermind group, I think we meet next Wednesday. And our topics are going to be related to raising capital in this environment. Like that's just a big thing right now. Like you need to control your capital and do it the right way. And, unless you have a good relationship with that person or you have really good deals, like that's the way to do it. You've got to have good deals. You're not going to raise capital from somebody if a borrower is 20% in. A real quick story before I end. So a buddy of ours who's a private capital investor, he invests with us as well, but mostly he just does stuff by himself on the side, which, makes sense. He reached out to me. He's like, listen, man, I'm scared. There's a lot of uncertainty. I'm on pause. And I was like, why? And he was like, well, I'm on pause. Like, I'm just not sure. And I was like, why would you go on pause? I was like, I get you're scared and there's uncertainty, but like you have liquidity. I understand to keep some in cash, but like you want to keep money working for you. There's good deals out there. He goes, oh, I'm sure there's good deals out there, but like, I'm just uncertain. I'm like, so you're telling me right now, if one of your good borrowers calls you up and is buying a property for $400,000 in cash, or buying it for $400,000 and all he needs is $100,000, you wouldn't give it to him? He goes, oh, I would do that deal. And I was like, well, there you go. You're not going to pause. You're not going to stop lending. Create the model based on what you want to do, of what you're comfortable lending on. Like, it's not going to be the same as your loans were 3 weeks ago. I understand that, but do it right. We lent $325 to a borrower the other day that just bought a property in cash for $675. We lent $150,000 to a borrower who had a property under contract that was renovated and he needed $62,000 cash to close. We lent $100,000 even on a deal today. They brought $53,000 cash to close, and they all had good credit. So like in times like this, just find the best of the best of the best of the best deals. I've had a lot. It's actually interesting because I felt like I'd have a lot of people that reach out to me like, oh, that's too high. That doesn't work, blah, blah, blah. Like, and I don't want to say I'm lowballing people. I'm quoting what I'm comfortable with. And most people are like, yeah, that makes sense. I'll see if I can make that work type of thing. And like, these are deals that like I'm quoting $100,000 and they need $50, $60, $70, $80,000 cash to close. And they're still like, back in the day, they would have flicked me off and said, you're ridiculous. Go pound sand. You're not competitive. Like borrowers know that liquidity is not, not all over the place like it was in this space. So, if there's any like positive or plus side to these crazy times and unfortunate times going on, if you are in the private lending world, there could be a lot of opportunity if it's done the right way. And I do believe if the market's going up, if the market's going down, the market's staying stable, there's always an opportunity with private capital or your own capital or creative capital stacks that you control. You've got to control the deal flow to make it work. And one last thing before I go, remember the most important thing in the private lending world and hard money lending world is access to deals, the right deals. The right deals will bring in the right cash. Like I told that story earlier. This guy wanted out. He didn't want to be involved in it at all until someone was buying it for 400 and they only needed a loan of 100 and he would have said yes to that deal. Good deals always get funded, but they got to be good deals. The right deals, tons and tons of skip. Low, you got to go in low. You got to go in low, almost an offer that, you can let the client just, the borrower just refuse if they don't want it. Just a good deal. Don't push it. We're doing less deals. We're trying to be as profitable as we can on the deals that we're doing. But we want really no risk right now until we see kind of how these things shake up. If you have any questions, reach out to me. Jason at hardmoneybankers.com, Chris at hardmoneybankers.com. And our next mastermind, if you're interested in that, www.hardmoneymastermind.com. That's a group we've been running for, a good bit of time. And, a lot of lenders throughout the country are in that. If you need anything, just reach out and I'll try to do some more videos soon as new things occur. Stay safe, stay healthy. Thanks.